Well guys, we have some big news in the stock market world here today. I'm looking at Grubhub stock up 36% on a day when the market is down. Looking at Uber stock up 5.5% today. I'm looking at these numbers this morning. I'm like, what in the world is going on with Grubhub and Uber today? Those are really big moves, obviously, especially the Grubhub move, right? On a day when the market's down, like what the heck is going on? And then I started thinking, oh, you know what? With this stock market, this is probably just a normal day. Like this is probably just another day, normal day in the market. And if you look at these stocks, they opened pretty normally today. And then all of a sudden, right about when the market had been open about an hour and a half, Grubhub goes crazy. It would have been very good to buy Grubhub stock at right about 7:59 a.m. on the East Coast today. Let's put it that way. Because that stock just shot up like crazy. And you look at Uber stock, the same exact thing happened with Uber stock. There was something happened here, some big huge news, and it sent these stocks up massive, okay? And the big news is Uber approaches Grubhub with takeover offer. Wow, there's been some talk for some time about maybe Uber would try to buy out somebody in the food delivery space, and it looks like it's gonna be Grubhub. Uber Technologies has made an offer to acquire Grubhub in a move that would build out its food delivery platform even as it shutters parts of its own service abroad, which is some smaller markets, okay? According to people familiar with the matter, the companies are in talks about a deal and could reach an agreement as soon as this month. As soon as this month, keep in mind, today's already what, May 12th or something like that? So that would be rather soon, said the people who asked to not be identified because the matter isn't public. Deliberations are ongoing and talks could still fall through, the people said. Obviously, when you're in talks to do any type of deal, it could potentially fall through. But when this stuff, starts to get public like this, a lot of times these deals end up actually going through. A spokesman for Uber declined to comment. Grubhub said in a statement, quote, "Consolidation could make sense in our industry, and like any responsible company, we are always looking at value-enhancing opportunities. That said, we remain confident in our current strategy and recent initiatives to support restaurants in this challenging environment." Obviously, they're going to say, if the deal, because obviously, what if the deal doesn't go through? They don't want to be in a position where like, oh, that we were just counting on that. They still want to be confident and, put confidence out there in their abilities to compete as a public company, okay? So now with that being said, we have some big questions to answer, okay? One is, how much would Uber have to pay for Grubhub? What would this deal likely go through as for Uber to essentially acquire Grubhub? The second thing we got to answer is, how likely is it that this deal actually goes through? It's one thing for two companies to talk. Would the government allow this deal to go through? Could Uber actually pay for this company? Like, how likely is this to go through? The third thing we got to talk about is the deal smart? Is this a smart deal? And I want to give my opinion on that. Somebody that, as you guys probably know, I'm an Uber shareholder, right? In the public account, for instance, I hold 1,000 Uber shares, and we're doing pretty decent as of right now. We're up about $5,500 on it, up about 20%, so we're doing decent. And this is a company I believe quite a bit in the future, so I want to kind of give my perspective. So I hope you guys enjoyed today's video. As always, smash a thumbs up, and also make sure you guys check out any free resources we have linked down in the description. You're definitely going to want to check out that description area down there, okay? So first question up here, how much would Uber have to pay? So Grubhub, as of today, and this is after the massive stock price gain for Grubhub, which is like a 35% move, the market capitalization is somewhere around roughly $5.8 billion. In my personal opinion, and I've been part of many takeover deals before where it's either one of my companies got acquired by a private equity company, or whether it's one of my companies actually bought out another company, I kind of have an idea of the valuation. And in my opinion, it'll probably be somewhere between a $5.5 billion valuation and a $6.5 billion valuation. I don't think Grubhub's selling out for anything under $5.5 billion. I think that would be their bare minimum price, okay? And keep in mind, what the stock price has done today, it's kind of irrelevant to the deal. So just that's something to kind of keep in mind. So in my opinion, the lowest number Grubhub would take would be about $5.5 billion. I think the most Uber would offer would be about $6.5 billion. So look for the number to be somewhere in there roughly. And just know if the number has a 6 in front of it, likely Grubhub had a little better negotiations. And if the number has a 5 in front of it, then Uber had a little better negotiations there. So look for the deal to be somewhere roughly in there. Now, if we look at Grubhub, the business has grown quite substantially, right? $683 million this company does in total revenue in 2017. This past year, over $1.3 billion, okay? We're talking about almost a double up in revenue in a matter of a couple years. That's very impressive. Gross profit, also pretty impressive. Not as impressive, but still pretty decent, right? 2017, $357 million in gross profit, and this past year, $521 million. Where it gets not so good is you go ahead and look at net income, right? $98 million of positive net income back in 2017. And then they lose money on the bottom line this past year. But something to keep in mind is the space has been incredibly competitive the last year. These companies are fighting over market share. We're talking about DoorDash, we're talking about Postmates, we're talking about Uber Eats, and we're talking about Grubhub. Those 4 companies specifically, and you got some smaller players as well, but those are the 4 main players, and they have been just going at it left and right. It's killed margins, it's killed profitability, and when you have that type of competitive landscape, it's really bad if you're competing there because, you know, it's just a lot of cuts, and it's just, you know, it's hard to make profits in the end in a scenario like that. Now, Grubhub has $425 million in cash on their balance sheet as of December 31st. So, meaning essentially, you know, that's money that Uber gets. You know, whatever's on the balance sheet, Uber's getting it. So essentially, imagine, you know, this company has, you know, let's say $500 million around in cash and maybe investments or something like that, or short-term paper or something like that. That essentially that's like a $500 million discount to Uber for buying the company out, essentially, okay? And never mind that, you get all the other assets as well. Now, what we're looking at here is very important, okay? This is a share of sales in the United States of America for food delivery platforms, okay? And this, you know, March was the latest month we grabbed data for. So essentially, Uber Eats had somewhere roughly around 20% of the market share. The number, I think, is actually a little higher than that, but because the way Uber kind of accounts for some different things, the number isn't fully reflected there. So, you know, we can say it's at least 20% market share for Uber Eats. And then Grubhub has 28% market share. So you combine those players together, and you're basically talking about roughly 50% of the market share, if not a little more than 50% of the market share if Uber Eats actually report it properly. So immediately you become the biggest player in the United States of America and likely worldwide once that company is acquired. And we know Uber loves to be what? They love to be number one. You know, you think about their rideshare business, right? There's 2 players in rideshare in the United States of America, North America in general, right? There's Uber and there's Lyft. And who is the main big player there? It is Uber. Uber loves to be in that prime position. They're the biggest. They're going to, you know, get the biggest benefits. They're going to control the market. They're going to, you know, push prices around and things like that. And Uber ultimately is going to end up getting there if they buy out Grubhub. They'll end up having, you know, the biggest market share out of anybody in that market. And you look at the only other major player is DoorDash, right? Postmates is somewhat of a player, but 9% market share. Needless to say, Postmates is kind of the lonely child left out there. It will be an Uber and DoorDash game at that point, okay? Now, something else I think is interesting. Uber doesn't want to just acquire them to become the biggest player, but you look at some of the markets where Grubhub's really strong, Uber Eats is really weak in some of those markets, and vice versa. Some of these markets, Uber Eats is incredibly strong, and Grubhub's really weak. Look at New York City, for instance. That's one of the biggest markets out there for food delivery, right? New York City, Grubhub has a 62% market share. Incredible, right? While Uber Eats only has 17%. You go down to Miami, another massive market for food delivery, right? Grubhub only has 9% market share in Miami. Extremely low. Meanwhile, Uber Eats has 56%. Look at Philadelphia. Grubhub has about 39% market share, massive, while Uber Eats only has 14%. Look at Atlanta. Grubhub has only 13% market share, while Uber Eats has 38% market share. So when you look at this, you can clearly see that some of these markets, Grubhubs are incredibly strong, and some of these Uber Eats is really strong. And you know, a deal like this kind of, you know, makes sense for the most part. Okay. Number 2, how likely is this deal to go through? So if we look at the balance sheet of Uber, could they financially pull this off? Absolutely. Uber has over $11 billion in cash as of their latest quarter, and equity and other investments of 11 plus billion. So Uber could easily financially pull this deal off, and it's not even hard. Uber could do the deal all cash if they want it. Remember, let's say they have to buy him out for $6 billion or something. They could buy him out all cash tomorrow. They could also do all credit, which, essentially, take out debt. Uber has no trouble like tapping the capital markets. Like, any bank out there would easily loan Uber the money to essentially acquire this deal. I don't think they'd want to do it on all debt. In my opinion, they're actually going to do probably a combo. I could see them doing something like $2 billion in cash and maybe $4 billion in debt or something like that, or maybe $3 billion, or they could even do a thing I didn't even put up here. They could essentially give some equity to Grubhub shareholders, which is also a possibility. Like give them Uber shares, to basically account for whatever they acquired. And I've seen definitely some deals go through in the past that go that route, where they essentially give equity in the company. It does dilute shareholder value to a certain extent, but it does allow you not to take out debt, and it does allow you to essentially keep your cash around. We'll see what happens. In my opinion, like I said, I think it will be a combo of a cash deal with some debt out there. Now, before I give you guys my opinion on this deal, I know another question would be, would the government allow this deal? Whenever you're talking about a takeover like this, the government always has to play. Would the US government allow this? I think they would. There's so much competition in the food delivery space. I don't think this would be something like, let's say Verizon and AT&T wanted to get together or something like that. The government's not going to allow that. That's just like too much of a monopoly on a needs-based industry. Food delivery, so much competition in that space. And the way I think the government would view it, I think this deal could definitely, go through, especially because both these companies are public companies and that have taken losses too. Let's also keep that in mind. It's not like these are super profitable companies that, or they combined them and it's like, whoa, look at all the money they're making. It's not that way as of right now. So I think the US government would allow it, okay? Now, do I think this deal is smart? I love it, okay? I absolutely love this. As an Uber shareholder, I would definitely, vote for this deal to go through, okay? Food delivery is red hot right now. We know that, right? I mean, restaurants around the country have been closed for the last couple months, and we know that even as the dine-in restaurants start to open, a lot of people are definitely going to be very wary of going out and going to these restaurants. People have gotten a lot more familiar with just the fact that if they want food that's out to eat, just order it on a food delivery platform. And the numbers that Uber Eats is putting up right now, off the charts, like 50% plus growth right now. Like, it's incredible. And every food delivery platform right now is growing this whole Rona situation, it's been bad for a lot of things, but for food delivery, it has been the best thing you could ever possibly ask for food delivery specifically, okay? So food delivery is super hot. This trend is not ending, in my opinion. It's not like all of a sudden when Rona gets over, everybody's like, nah, I don't want to order on food delivery anymore. Like, this is something, once you start doing it, you keep doing it. So food delivery is a trend that will play out for decades to go in the future, okay? You've had a ton of people sign up and basically become new customers of Grubhub, of DoorDash, of Uber Eats. Like, just a lot of customers that have never even thought about getting food delivery from one of these apps before that have now started doing it because of Rona. You have former customers, that I don't want to call them former customers, but customers that were already your customer. Like, I already had Uber Eats installed. I would order from Uber Eats maybe like once a month. Now I'm doing it like once or twice a week. And that kind of becomes a habit. And it reminds me of like when I first started using Amazon. I think I became an Amazon customer, I think around 2010. And back in those days, I would order from Amazon maybe once a month, maybe once every 2 months, right? Versus all of a sudden, 5 years go on, maybe we're in 2015, I'm starting to order from Amazon every, let's say, 2 weeks. And nowadays, I order from Amazon, sometimes several times a week. Those Prime vans are in front of my house, okay? So essentially, you become more of a habit. You get in that I'm just used to using this. This is what I use. I order from it, and you keep replenishing, right? And restaurants, this is another big factor that people aren't even accounting for. The fact is, there was tons of restaurants, tons of fast food players that refused to go on Uber Eats or a lot of these different food delivery platforms because they looked at it as, well, we don't want to give them a cut of things. What if we have to raise our prices? Is that going to damage our sales and things like that? And what every single fast food joint, every single restaurant that's gone on these platforms has realized is, this is a massive opportunity. Why weren't we doing this before? But a lot of them were hesitant. They were like, well, is the food going to still get there hot? Or are we going to get customer complaints? How do we handle that? There was all those thoughts. And this whole Rona situation has forced every single one of these companies to say, don't worry about that. Get on the platforms and watch the sales pour in. And that has happened for pretty much every single player out there. And the restaurants aren't going back from this. This is like a stimulus for the restaurants, okay? Getting on these food delivery platforms. If you think all of a sudden Chick-fil-A is also going to be like, no, we don't want to do, food delivery on these platforms anywhere more. Like, that's not going to happen because they're seeing their sales go way, way up. And that goes for every single fast food place and every single restaurant out there. The fact is, once you get used to that and you get used to that money coming in, you're like, do I want to get off of Uber Eats and DoorDash and Postmates or all these platforms, or do I want to stay on and keep having that extra 10%, 20%, 30% bump to my business? You're probably going to stay on, right? So the fact is, restaurants aren't going back on this, and that's phenomenal news for Uber Eats and everybody in the space, okay? They would become the biggest player, and like I said, with Uber, they want to become the biggest player. You then become the controller of the market. You then can dictate, how much money is made out there, if you want to be super promotional or things like that, and the other players kind of they got to go with it. And I think when you become the biggest player, the chances of profitability go up immensely, okay? DoorDash and Uber would control the entire market, especially in the United States. I mean, we'd be looking at probably 5% plus of the market share, if not 90% of the market share controlled between two companies. That is much more healthy for the delivery market. Let's put it that way. The chance that, competition then goes out the window, because then you go from 3 major competitors competing like crazy, and you could, if you want to throw Postmates in there, it's really 4. So all of a sudden now you go down to 2 real competitors out there. And don't be surprised if this deal goes through. Don't be surprised if DoorDash ends up acquiring Postmates. Something to keep in mind there. That's not a for sure thing, but if this deal goes through, DoorDash, Postmates are going to have to look at this as we got to combine, or Postmates might go out, and I think DoorDash would like to just acquire Postmates. So once the competition gets out, profits pour in. Another reason, by the way, DoorDash would likely try to acquire Postmates if this deal goes through, because then DoorDash is going to be very scared that what if Uber buys Postmates as well? Then they get even more market share. So, that's a whole thing. So competition goes out, this cutthroat, what's going on in the food delivery space, it ends. And what ends up happening, profits pour in. And by the way, before this Rona situation, Uber's rideshare business was starting to look extremely profitable. It's a shame that the Rona had to come and mess up the rideshare business right now. But that will get back on track over time, and that will become a profit beast because there's just lack of competition in that market. There just is. Like, you look around the world, there's usually only 1 or 2 competitors in pretty much every market. As with the United States, you want to ride somewhere, Uber, Lyft. Most people are taking an Uber, okay? Profits will pour in. I love this deal. I hope it goes through. I would love something with a 5 in front of it for the deal to go through. That would be ideal. But even if it has a 6, I would still vote for it. So I hope you guys enjoyed today's video. As always, let me know your opinion in that comment section. Smash the thumbs up if you enjoyed today's video. Thank you for watching. Have a great day. Don't forget to check out the free resources in the description.